Investors love Xpeng and XPEV stock because it has expanded its product portfolio and are able to meet the needs of autonomous driving features at a similar price point. This could be a strong appeal to many consumers and potentially lead to the rise in demand. Considering its diversified product offerings, it seems to me like there's a huge growth runway down the road for the company. Today, we'll tell you why Xpeng XPEV stock is a buy now. Number 6. Outlook for Xpeng EV stocks. Several new EV stocks emerged in the wake of leader Tesla TSLA, including Nikola, NKLA, Workhorse Group, WKHS, and Hyliion, HYLN, as well as Xpeng and China EV startup peer NIO, NIO. Additionally, several legacy automakers are in the process transitioning to hybrid electric mobility, including General Motors, GM, Ford, F, and Ferrari, Race. Each of these major automakers laid out plans for EV production and sales in China and around the world. As the competition heats up, Xpeng has been expanding operations to fend off Tesla and other major players in the EV market. In 2020, the company more than doubled its volume of vehicles delivered versus 2019 to 27,041. The firm also recently introduced a sedan model in hopes it'll be a significant driver of sales growth. After its launched in early 2020, Xpeng's P7 sports sedan quickly reached a total of 20,000 deliveries and surpassed the G3 compact SUV as the firm's most popular vehicle. This was a major milestone for Xpeng because it became the fastest vehicle to reach 20,000 deliveries of any Chinese EV startup. But Xpeng stock has been under pressure since February after China announced it's going to cut EV subsidies. A subsequent sell-off in group leader Tesla stock over the past several weeks also hurt the China EV company, whose shares slipped over 35% from their February highs. Xpeng stock formed an IPO base shortly after it debuted in August 2020. From there, the stock had a successful breakout from a 25.10 buy point. Shares soared past 74 until they peaked November 24th. The stock lost about two-thirds of its market value before bottoming at roughly 25 in early March. The sell-off slowed after the company reported earnings on March 8th. Since then, shares have rebounded significantly. The stock still remains below the 50-day moving average, and there is no proper base so far, according to MarketSmith chart analysis. Xpeng stock maintains a very low relative strength rating of 9, which is far below the minimum of 80 for growth stock contenders. Number 5. Record-breaking sales. From its first quarter deliveries, Xpeng has delivered a record-breaking 13,340 smart EVs. This represents a 487% growth year over year. That demonstrated Xpeng's robust growth momentum despite the seasonal industry-wide slowdown in car sales. Deliveries in March were 5,102 vehicles, represented a 384% increase year over year and a 130% increase from the previous month. Xpeng attributed the record to its growing brand recognition, product appeal, and expanded product portfolio. Furthermore, the company has also been relentless in broadening sales, marketing, and supercharging service networks across China. If Xpeng can keep its momentum up, the company could easily hit another record later this year. The company also launched a lithium iron phosphate LFP battery option across all of its models. Unlike the nickel counterpart, LFP batteries are economical, have a longer lifespan, and reduce the risk of overheating. Investors love Xpeng and XPEV stock because it has expanded its product portfolio and are able to meet the needs of autonomous driving features at a similar price point. This could be a strong appeal to many consumers and potentially lead to a rise in demand. Considering its diversified product offerings, it seems to me like there's a huge growth runway down the road for the company. Number 4. The opportunity for Xpeng. Interest in electric vehicle stocks has surged in recent months. However, not every winner of the renewed interest in EVs has gone to American companies. Xpeng Motors, NASDAQ, XPEV, an electric vehicle manufacturer and researcher based in Guangzhou, China. Xpeng saw its stock increase in price by more than 40% on the day of its initial public offering, IPO. And investors are looking to the EV company for 2021 and beyond. Xpeng's opportunity is enormous. China remains the leading company for EVs, accounting for an estimated 41% of global sales last year. The 1.3 million units sold are only modestly behind all of Europe and in the range of 15 times the US figure. Adoption is only going to accelerate. Although the Chinese government has been inconsistent with its subsidies, it continues to support the industry. Beijing wants EVs to account for 1/5 of all vehicles sold by 2025. Obviously, competition is stiff from both Chinese and American companies. But Xpeng is off to a tremendous start. The first production model, the G3, was only launched in December 2018. Last year, Xpeng delivered over 27,000 vehicles. In just the first 3 months of 2021, it delivered nearly half as many. Xpeng isn't profitable yet, but that's not a surprise. Startup costs are high and the company hasn't yet reaped the benefits of scale. According to a prospectus, it has manufacturing capacity for some 250,000 cars. Deliveries this year likely will be less than 1/4 of that total. But growth has improved gross margins, which turned positive last year. Quite clearly, Xpeng is on the right track. Number 3. Xpeng stock by the numbers and ratings. Xpeng reported mixed fourth quarter results March 8th. Since then, shares gained more than 51%. Earnings for the December-ended quarter missed Wall Street projections, but revenue exceeded estimates. The company lost 15 cents a share as revenue surged 345.5% to $437 million. Analysts expected a loss of 12 cents a share on revenues of $411.38 million, according to Yahoo Finance. Xpeng reported selling 12,964 vehicles in the fourth quarter of 2020, up 303% year over year, and delivered a total 27,041 vehicles in 2020, up 112%. But in early March, the EV maker reported February deliveries far below January's total amid the Lunar New Year holiday. Deliveries fell to 2,223 from 6,015 in January. The company expects Q1 deliveries of 12,500 vehicles, up from 450% versus a year earlier. Analysts see 2021 EPS falling 11% for Xpeng, but they estimate a 45% gain for 2022. We closed 2020 on a strong note with a record number of total deliveries in the fourth quarter of 12,964 vehicles, led by the P7, our second smart EV model, which fueled our robust operational and financial performance throughout the year, said He Xiaopeng, CEO of Xpeng. We proudly offer our customers a revolutionary in-car voice system and smart cockpit technology, as well as X-Pilot 3.0, our self-developed full-stack autonomous driving system, and we are poised to launch our LiDAR-equipped third smart EV model in the second half of 2021, he added. Number 2. Looking forward. The dip in Xpeng stock is a big-time opportunity. There's no doubt that the optimism towards electric vehicle stocks went a bit too far. Xpeng stock was one of the prime examples, and there's plenty of reason to expect that growth will continue. Again, the market is going to grow. For its part, Xpeng appears to have government backing, no small edge in the centrally controlled country. In January, it inked a credit facility with a number of state-owned banks. providing access to 12.8 billion RMB, roughly $2 billion in capital. New models will boost results as well. This month, Xpeng announced its third production vehicle, the P5. Notably, the P5 comes with LiDAR technology pre-installed. LiDAR is one of the most common and promising technologies for autonomous driving, and the software was developed in-house at Xpeng itself. That's a big competitive advantage and valuable intellectual property. It bears repeating. Competition is going to be stiff. But what we're seeing from Xpeng suggests it can more than hold its own. Delivery growth has been consistent and impressive. The cars are stylish. The technology is leading edge, and the government is on its side. Xpeng looks set to be a winner in a massive growing market. That's precisely the kind of company investors should want to own. And at these levels, the stock is getting interesting as one of several EV names that have been hit overly hard by the sector-wide sell-off. There has always been a lot to like about Xpeng stock. Now there's a cheaper price too. Number 1. Conclusion. Xpeng, XPEV, is a good investment right now in the secular growth of the EV market in China and elsewhere, given that it has a cheaper valuation compared to its closest peers and its technology is competing with Tesla and is ahead of local peers. Electric vehicles are clearly the future in the automotive industry, and the Chinese market in particular is well ahead of other major markets regarding adoption of EVs. This is very positive for EV-focused companies that are entering the market and can grow massively, both from growth in the EV segment and higher market share due to first-mover advantage over legacy automakers. Taking this background into account, Xpeng seems to be one of the best plays in the Chinese EV market due to its technological developments that are ahead of local competitors, which may represent a competitive advantage over the long term. Moreover, considering current sales estimates for this year, Xpeng is trading at an EV sales multiple of 10.1 times, while NIO is trading at 12.3 times. EV 2021 sales and Tesla is 14.3 times. Thus, even though these are not cheap valuations when compared to legacy automakers, Xpeng seems to be attractive compared to EV-focused peers and is, therefore, a good way to invest in the secular growth prospects of the EV market. Do let us know in the comments what you think of this stock. Please subscribe to the Stock Advisor. Thanks for watching.